Good morning from London. This is Bloomberg Markets Today. I'm Kriti Gupta alongside Francine Lockhart this morning with cash trade just less than an hour away. Here's what you need to know. Dozens killed by Israeli airstrikes in the southern city of Rafah late Sunday, just days after an ICJ court ruling ordering Israel to halt operations. In Europe, French President Emmanuel Macron is conducting a 3-day state visit to Germany off the back of the G-7 meetings in Italy, a capital markets union in focus as he deals with mounting debt pressures at home. Meanwhile, in the markets, green on the screen as Asia retraces a 4-day equity slump. Meanwhile, stock and bond markets in the U.S. and U.K. are closed.
Now, they are closed, so let's look at some of the things that are actually open. A lot of the focus this week will be on the inflation prints, Australia to Japan, Eurozone and the U.S. Due this week, traders again trying to finesse some of the bets they have on the outlook for monetary policy. Now, for the moment, you can see some of the futures here in Europe practically unchanged. We did see NASDAQ at a record high, and then the Fed's favorite measure of underlying inflation due on Friday, and that's moving both the euro, dollar and yen gold. Look at that, Kriti, 2,343.
Markets Today starts right now. All right, good morning. For those of you who are actually working this bank holiday, although I hear that the folks in Europe actually are still working as well. So to you, good morning. I'm joined this morning by Francine Lockhart joining me this morning. I think this is the first time we've ever co-anchored together.
So happy to be here on a bank holiday.
It's fun. It's fun. This is we picked the short straw, but we're going to have fun with it, especially because even though the markets aren't open here in the UK, or they won't be, there is still plenty to discuss on the markets front as well. Plenty of geopolitics going on. The T+1 trade is my obsession of the morning. But again, I think the geopolitical theme and how you trade it seems to be the big focus today.
Yeah, I love that you're so focused on T+1. I think a lot of the traders in Europe are probably thinking, like, I need a day off because tomorrow I don't know how I'm going to do that trade because they have to get dollars ahead of it. But look, yeah, the G7's probably dominating. There's a lot of talk about geopolitics, and then Macron also heading to Germany. That's mainly a story on defense, and then we'll see what they do in the Capital Markets Union.
It's so fascinating that this is coming at the same time that in France in particular, we know these debt issues are mounting. We know that the Prime Minister, for example, over in France has now pulled back on jobless benefits, which as the American in the room, I was surprised that some of those benefits even existed. But it's fascinating that even then, the solution to a lot of those issues at home seems to be, well, let's get more fundraising in the markets. Let's get this capital markets union while we're still talking about some of that funding around the war. And I feel like that was the big takeaway around the G7 as well.
Yeah, so the G7, they were quite hard on China. There is quite a lot of difficulty for the G7 members, I think, to find commonality. And if you look at elections, so we have the big U.S. election. I know you all are over that, and we also heard Bill Gross talk about it. But if you look at Europe, first of all, these are economies that spent a lot because of benefits and actually sustaining everything with COVID. And so the focus now is not only on debt issuance, but there's the big election June 6th. So I think the next couple of weeks we'll really try and be politicking to make sure that they don't lose out too much to the far right.
Well, speaking of the right, at least, we should talk about the UK as well, because this is now we're finally starting getting the first initial moves on policy, or at least the campaigning from out of both Conservatives and the Tories as well. The National Service was interesting coming out of Sunak over the weekend. I realized there wasn't much of a market read-through on that, but I thought it was interesting that Labour as well said that they're really looking to get rid of that NatWest stake, and that if they do come to power, that would be one of the first things on their agenda.
So I read something over the weekend saying, you know, they have 50 days, and it's like the geek Hunger Games, because I think the two politics, or the two sides are kind of so linked when it comes to business that they're going to try and say things to make a difference. It's like, vote for us, it'll be a bit wacky, but we do this. On NatWest, I'm not too sure. So they said they'd have a review. At the moment, you know, the government has around 30%. I mean, they need the money. So then there's a big question about what happens to the money or how they use the money. But it'd be quite bold for them to keep that 30% because they need to spend for other things.
And they've been divesting this whole time anyway in the stake as well. I mean, this is a trend that you've seen, that the NatWest government stake has come lower and lower anyway. In terms of what to do with the money, I think that's been, to your point, one of the key things with the G7, specifically when it comes to Ukraine and what happens with the frozen assets there. You mentioned China as well as one of the key pieces. It's interesting that they're talking. There was so much to talk about at the G7. I don't even know where to begin.
Well, I would begin with the fact that they actually had a communique at the end of it, which I know seems like, well, if you get
a low bar, but a success anyway.
Low bar, but this is at least something that we got. I think when it comes to Kyiv and actually funding Ukraine, it's extremely difficult to see where, again, they find the money, how this bloc holds after the U.S. election, and then Macron kind of going rogue with even, trying to promise this army that isn't really being followed through by anyone.
I'm trying to connect the dots between the geopol and the markets. This is what Guy Johnson comes on every morning and says, what is the connection here? Maybe we can get a little bit more insight here. Oliver Crook has been on the scene for us. Of course, you talked a little bit about the China story. We talked about the escalating tensions from some of the finance chiefs. Ollie Crook, now back from all of his travels. I think he was on the road for like a week or something. Ollie, what did you learn in all your coverage?
Yeah, so what I think was really interesting is, initially this plan, this G7 finance leaders, ministers meeting was not really meant to be sort of the main event to be China and trade practices. But then, of course, President Biden dumped those tariffs onto EVs and a number of other issues. And now we're expecting the EU to do similar in the next couple of weeks. And it really became one of the prominent issues. And it's something that Janet Yellen, in particular, was very clear to pushing forward. And as we know, and as Francine was alluding to, there's always a bit of hedged language around China. There isn't total consensus among everyone about how to go about it. So for the G7, what they were really trying to do is put together a sort of united front on their approach to China, even though there weren't any sort of concrete actions, summarized perhaps nicely by Bruno Le Maire, the French finance minister, who I caught up with.
We agree at the G7 level that we have an issue with the Chinese industrial overcapacities. And this is not a question, anything against China. China is an economic partner. But we have an issue with the economic model in which China is producing more and more cheaper industrial devices, because it could be a threat not only for the EU, not only for the US, but for the global world economy.
So we don't have a problem with China, but there's an issue with China. Those are the words of Bruno Le Maire speaking there at the sidelines of the G7 ministers meeting. The only person who was really the greatest defender of anti-protectionist policies was Jeremy Hunt, who I spoke to, who was saying basically really warning his allies as well as China to not get into this sort of tit-for-tat trade war, which obviously would have huge implications for the global economy.
Yeah, I mean, maybe they need China more than other G7 countries. Ollie, what about, the big legal concern was actually what they do with frozen Russian assets. And finally, we're a little, we have more of an idea what they'll do with that.
Yeah, so Francine, really the conversation there is coalescing around that U.S. plan, which is sort of cutting a check today or in the next couple of weeks and months for the future profits of those Russian assets that are being held overseas, mostly in Europe, and how to basically get there. What I was a little bit surprised by, Francine, is that despite the fact that there is broad consensus among the G7, as we heard from the Chancellor of the Exchequer, let's listen to him right now.
The G7 was absolutely united in its support of Ukraine, and it always has been, but I felt that it was stronger than I've seen it before, and I think that needs to send a very big signal to Putin that we are not going to let him succeed.
And so, again, you had very encouraging words from Jeremy Hunt, very encouraging words really from everyone who attended there. But what you failed to get was the actual architecture, the legal framework under which this plan would proceed. And that was really what they were there to do, to set the groundwork for the G7 leaders meeting, which is only 2.5 weeks away. So they need to work out those details in order to get that disbursement out. If they fail to do so, Francine and Kriti, this is really a very poor sign of unity from the G7 in terms of supporting the Ukrainians financially, because, of course, it's all about getting that money safe if in the next year and the coming years funding the war in Ukraine, particularly with the U.S. election where the sort of outcome is unknown.
All right, Bloomberg's Oliver Crook walking us through some of the key highlights of that G7 meeting. And, of course, off of the back of that, Francine, we've got Emmanuel Macron in Berlin. We talked about this a little bit earlier. But before we dive into the geopolitics of that, you mentioned Bill Gross at the very top. He was making some comments to the FT as well, talking about the bond market, surprise, surprise, from the bond king, or the former bond king, some would argue, basically saying that a Trump presidency is a bigger risk to the bond markets than a Biden presidency would, even though a similar theme to kind of the conservative and labor government story that we were talking about, and that the policies aren't actually that different when you look at it from a protectionist point of view. I'm curious about what the kind of alignment you're going to see then between two European powers like France and Germany is as well.
Yeah, just briefly on the U.S. election, I mean, it's crazy if you think that neither party has talked about what to do with the debt level.
Yeah.
And so you hear from Goldman Sachs, from people in the markets, and say, look, the real danger, I think this is what Ken Griffin was saying also at the Qatar Economic Forum, that at some point you could have a big auction that goes badly. You can have a big auction that could turn into a market event.
Yeah.
And so it's interesting to see that Bill Gross says, look, there's going to be more volatility. under Donald Trump. But actually, we don't really have a plan on how to deal with the debt level on either side.
And his case, basically, to your point, was it's because Donald Trump will likely spend more than President Biden will. And at the end of the day, I think my very favorite fun fact around the election is that January 2025, the very first thing after they get inaugurated is that debt ceiling. That's the very first thing that they have to tackle. Forget the trade and everything. And it'll be interesting how they actually do that. But again, the debt story is one that is plaguing every G10 economy, really, at the point.
Absolutely. And you can see that playing actually in France. You can playing it in Germany. And again, when you have the big European elections, it's interesting to see how both Germany and the Chancellor and, of course, the French president will try and fend off some of the far right. Now, we know that the two leaders don't always see eye to eye.
Yeah.
So it'll be interesting. I think Emmanuel Macron is like on a 3-day visit to Germany. It'll be interesting to see how they interplay, whether there's, the capital markets union back on the table. I feel like I've been waiting for a capital markets union in all of my lifetime. One day it will come, and certainly Emmanuel Macron saying, look, he's also open to cross-border consolidation with European banks. I was surprised when he told that to our editor-in-chief.
Yeah, it was fascinating. And this is, again, all coming in the backdrop as well of this idea of inflation, of kind of where the commodity pressures are around the world. And that's where the Middle East also comes into focus.
Yep, let's focus on the Middle East. And the Hamas-run health ministry says at least 35 Palestinians have been killed in an Israeli airstrike at a camp for displaced people in the southern city of Rafah. Now, the strike came 2 days after the ICJ also issued a ruling ordering Israel to halt its operations in order to spare civilians. Now, Israel said it carried out the strike based on precise intelligence. Let's get more from Bloomberg's Onur Ant in Istanbul. Onur, thank you so much for joining us today. There has been a shift, actually, in the way that the world is viewing this slow incursion into Rafah. What can we take after what happened yesterday and how the international community will react?
Well, yesterday's airstrike by Israel, which came after Hamas launched rockets into Tel Aviv, all of which were intercepted by Israeli air defenses, resulted in the deaths of dozens of people. As you said, this is by far one of the most significant surges of violence the last few weeks. And it came, there are a few important bits and pieces about the event, about the incident. First of all, the attack took place in an area of Rafah where there had been no evacuation order on civilians. Therefore, hence the high number of casualties. And it also came just 2 days after the ICJ court ruling, and as I said, kind of highlights the drama or the disagreements surrounding the ICJ court ruling from Friday. Whereas many people thought that the tribunal's order from Friday was meant to say Israel should stop its military and other operations in Rafah to spare civilians, as you said. Many in Israel, including the National Security Advisor, Raji Hannibal, said that the court's decision was actually not an unconditional call for an end to hostilities, but instead it was basically meant to tell Israel, simply put, do not commit to genocide in Gaza. And Israeli officials said that Israel did not and will not commit a genocide in Gaza. So there is a very significant disagreement over what exactly the court ruling meant on Friday. And I think finally the most important point is that we were expecting a resumption of ceasefire talks between Israel and Hamas through mediators later this week after Qatari foreign minister met with intelligence chiefs both from the US and Israel. But if anything, Sunday's escalation in violence puts in jeopardy those ceasefire talks. And those ceasefire talks are critical on the one side for Israel to get the Israeli hostages held by Hamas to be released, and on the other hand, for Hamas obviously to bring the fighting to an end.
And of course, it all comes in the context as well of that pier that the U.S. built as well, the distribution there and the aid there getting delayed as well. Bloomberg's Onur Ant, we thank you so much for that crucial context on what's going on in the Middle East. I want to take a quick look at what else we're going to be watching today. Onur mentioned some of the potential ceasefire talks and developments there. There's plenty going on between Europe and the United States as well. The U.S.-UK markets closed today, as we mentioned at the top of the show. But geopolitics really in focus. The EU Foreign Affairs Council meeting on defense does conclude Wednesday, so perhaps a little bit more guidance on what that looks like in terms of their approach towards Ukraine. We know Vladimir Zelensky has been, again, pushing for more and more aid, not just in terms of actual financing, but in terms of the defense and ammunition as well. You got the South African elections. We'll We'll have full coverage of that in the next couple of hours as well. The things that you need to watch, a potential historic majority getting overturned there. The Fed Beige Book as well. Eco data very much in focus coming in on Thursday. Plus euro area economic confidence, unemployment, consumer confidence. Basically, all you need to know is the back half of the data, back half of the week, is very, very data driven. And that's going to be something that we watch going into the weekend.
Yeah, absolutely. I mean, data is all, that matters to anyone on the trading floor right now because of all of the swings around about what the Fed does when it starts cutting rates. And I think the big question for the ECB and for the BOE is that once they cut, what happens afterwards? This is not like a cycle like we've seen in the past.
It's not. And I think Philip Lane made some comments as well that you pointed out this morning. I think it was in the FT, basically saying that we need to be higher for longer, restrictive for the rest of the year, which is interesting for the ECB when so many people are saying if June 6th is a basically foregone cut, what happens after that? And that's crucial in terms of setting the precedent for a lot of other central banks as well. Coming up on the program, we're going to be discussing plenty of that. We've got a great markets guest lineup, but coming up after the commercial break, we're going to look ahead to South Africa's elections. The mayor of Cape Town joins us with an interview at 7:30 a.m. UK time. You do not want to miss it. Plus, Chinese trade practices, have been criticized by G7 finance chiefs who are threatening escalation. We're going to speak to Livia Paggi, Managing Director of Global Investigations at JS, held later in the show. As always, get involved in the conversation. If you have any questions of your own for our guests or even for us, just type in IB plus BBTV Go. This is Bloomberg.
What did we really right over the last 2 years is that we really followed the meeting to meeting here understanding, and I believe that should still be the case. So if there's a rate cut in June, we have to wait, and I believe we have to wait till maybe September, I think July. But as I said, it is too early to speculate.
Well, that was the Bundesbank President Joachim Nagel speaking to Ollie Crook exclusively on the sidelines of the G7 finance mentor in Stresa, Italy. Now, joining us now to talk FX and monetary policy, Sonia Martin, DZ Bank Head of FX and Monetary Policy Research. Sonia, thank you so much for joining us on this Monday morning. A lot of the talk is that we haven't really seen a cycle like this where central banks, after increasing by a huge amount in a very short amount of time, 18 months, have to cut not into a recession. Does it mean that they'll go much slowly in trying to readjust monetary policy?
Yes, I think that's true. I think just looking at how the market has shifted its expectations for the central banks really illustrates the level of uncertainty. There is this big underlying fear that inflation could flare up again, and this is something that's going to make them move very slowly. I mean, Joachim Nagel just pointed it out. They're probably going to cut in June, but then wait. And I think we're favoring a quarter-by-quarter approach. And when you look at the latest wage data out of the Eurozone, for example, I mean, negotiated wages did tick up to 4.7%. That was a bit unexpected. It turns out that this is due to a particular one-off effect, but the reaction in the market does show that there's a concern here that central banks may not be able to cut as much as people had been hoping they would, and so it's very much going to be driven data point by data point, and that means additional volatility for the market because people will try to navigate this uncertain environment.
Sonia, when the Fed starts cutting rates, what kind of economy do you think they'll start cutting in? I know we're seeing a slightly slow down, inflation also coming down, but what happens in 5-6 months from now?
Well, actually, they're probably going to be cutting into a recovery, if you will. I mean, we are seeing a mild dip in growth right now. It's not exactly a slowdown. It's a bit of a slowdown, but not a deep one. But they probably won't be cutting rates until after the elections. Inflation is still quite high. Growth is still quite strong. But there's also, of course, at some point, the problem that they don't want to cut right ahead of the election. At least that's our take on things. So they'll wait until after. So the first choice would be to maybe cut in November, but that's just 2 days after the election. We don't exactly know what the situation in the US is going to be like. So we favor December. So they're actually going to be cutting into a very solid growth environment, but inflation will have come down, and that means they can reduce what currently is a very restrictive monetary policy level.
Well, Sonia, if that's kind of the consensus view here that the ECB is looking for at least a cut on June 6th. You have this kind of longer rates path over in the States as well post-election. Why isn't the euro weaker? Why are we still at 108 right now?
Well, yeah, it is a bit of a mystery, and a lot of people have said, well, if the ECB cuts before the Fed, then the euro dollar should go to parity. And I would argue that if that was going to happen, it already would have happened. We'd already be there. I think it's a combination of factors, but I think above all, it's the fact that the market has had some time to digest this news. We've had a period where a lot of bad news was priced in for the eurozone, and I think we got to a point where the downside for the euro was looking fairly well protected, and the opposite is the truth is the case for the US, right? We had a lot of good news. We had an outperformance of the economy, rate cut expectations, when they were starting being priced out, we were already filled up with good news. And then also don't forget, we have seen some improvement in the fundamentals from Europe. I mean, we don't talk about it enough maybe, but data has been improving. And when you look at the Bloomberg Economic Surprise Indicator, you can see that reflected there as well. So I think that's been helping the euro a little bit as well.
Sonia, I feel like Guy Johnson has gotten into your head. He loves to talk about how some of the outperformers in the periphery is driving Europe right now. And it's handy that we have Francine Lockwood here today as well, because Italy and Spain are actually outperforming in so many ways. At the same time that we're talking about a lot of these debt struggles for France, for Germany, et cetera. To what extent is the FX narrative driven more by the fiscal than the monetary?
I'm not sure if it is necessarily driven by the fiscal side, because I think you guys discussed it early on. When you look at the fiscal situation in the US or also in many European states, it's a bit scary. I mean, it's not exactly good news, right? And it's not getting any better. I think that it's the fundamentals in terms of just growth, which is driving the euro. I mean, the outperformed Spain, Italy, Portugal did really well. We're going to see some data this week probably as well. Sentiment indicators improving. I think that's driving the story a little bit. And then, of course, I think overarching above all of this is still the fact that we still have a situation, in the US where, we are slowing down a little bit, where there's a lot of uncertainty about when the Fed's going to cut. So I think that's keeping euro dollar in this sort of weird suspense mode where we're sort of trading fairly flat without any trends in either direction for the time being, and I think that might remain the case for some time.
Sonia, talk to us about the BOE. So we have a bit of a bet in the newsroom, because the BOE has basically this self-imposed purdah where they won't talk before the election. That's on July 4th, which means that we don't actually have any speeches or public commentary, and then we're possibly looking at a cut maybe late summer. Is that going to be helpful, or is that going to be hard for traders?
I think the market had been toying with the idea that there could be a cut a bit earlier, but obviously with the election now coming, that is highly unlikely. So I'll wait until August. I think that August is a likely time for a first rate cut. The BOE is in a position to cut rates. Inflation has come down a lot. It would be helpful, I think, generally speaking, to start this process, albeit, here as well. We're probably looking at a central bank that is going to move fairly slowly once it starts cutting, just because, there are so many uncertainty factors. And of course, this election adds massive uncertainty, because it is not quite clear what the fiscal plans of the new government will be, although Labour has already stated that they're not planning to do anything massively differently in that regard. So I think they can probably safely cut in August, and then it's sort of wait and see once again.
Sonia, 30 seconds here. I'm putting you on the spot. Does fiscal headroom matter for the UK? Is it less a concern of policy and more of a concern of kind of being handcuffed? Again, 30 seconds if you can.
No, it does absolutely matter. And it is an issue that the next government will have to deal with. So, yes, absolutely, it is an issue. And we've seen on the example of Liz Truss how fast this can explode if handled the wrong way.
That's certainly something we're going to keep an eye on. Sonia Martin, head of FX and monetary policy research over at DZ Bank. We thank you so much for the crucial context, covering a little bit of all around the world for us. Coming up, we talk about the story in South Africa. They are heading to the polls this week. We're going to be live from Cape Town, hearing from the city's mayor ahead of Wednesday's general election. Jennifer Sabasaja, our correspondent out of South Africa, bringing us that interview. It was live right here on Bloomberg TV. You don't want to miss it. This is potentially a game changer when you're talking about the politics and what goes on for a historic majority in that country. That conversation coming up next. This is Bloomberg.
South Africa is the world's most unequal society.
Around informal settlements, there is no electricity there. Sanitation, it's not that good. There are times there's no water.
You could throw a stone and it would land in one of the highest concentration of wealth areas in the country. On this side, you have one of the darkest, scariest informal settlements and townships in this country. About 10% of the population, which is oftentimes white, owning the range of 80% of the country's wealth.
This was Soweto.
It's been 30 years since the end of apartheid, the structural system of racial segregation that nearly ripped South Africa apart.
We are going forward. The march towards freedom and justice is irreversible.
But for many black South Africans, the story of optimism and renewal associated with Nelson Mandela's coming to power has not materialised. 30 million people, well over half the population, is still living in poverty.
A lot of the failures in transforming this country have often been placed at the feet of the ANC.
The end of apartheid started something special, but it hasn't fully delivered, and that's left ordinary South Africans torn. On the one hand, thankful, having known the horror of life before, but on the other, frustrated with what might and should have been.
Well, that was Bloomberg's Tom Gibson reporting on South Africa's racial divisions. Now, President Cyril Ramaphosa is urging citizens to turn out in Wednesday's election. This comes as South Africa's ruling ANC party actually risks losing its parliamentary majority for the first time since the end of apartheid in 1994. Now, let's bring in Bloomberg's Horizons anchor, Jennifer Zabazaja, who's in Cape Town with a guest. Jen, it's going to be a busy week.
Busy week for sure, Fran. Good morning to you. Yes, I'm standing by with the mayor of Cape Town, Jordan Hill-Lewis, joining us on what is now a very sunny Cape Town day. Jordan, there's so much to talk about, but I want to start here because there's a lot of discussion about a post-election scenario, what a coalition could potentially look like with maybe the DA, maybe the ANC. I mean, what are the discussions amongst the party members about how governing could potentially work?
I suspected you might go straight there. Good morning to you. On this magnificent Cape Town morning. Today is, of course, the first day of the election, really. Special votes open in about 20 minutes or so. And at the moment, for the next 72 hours, the focus is 100% on turning out as many of our party supporters as is possible to get out and make sure that when this new government is negotiated, as we believe it will be, that we have the strongest possible negotiating position with the most chips at the table. It really is almost impossible to predict exactly how these new government negotiations are going to turn out. If the ANC does, as consensus seems to expect that they will do, in the mid to high 40s, that will still be a momentous moment for South Africa because they will have lost their majority for the first time in 30 years. But it will be quite easy for them to put together a coalition of the bits and pieces parties, we call them, all the small, tiny 1% and below parties. Really, where it gets fascinating is if they underperform to expectations and get in the low 40s, then we really, there's only a few options on the table. It is the Democratic Alliance, the party I represent, which is a centrist party. It is the Economic Freedom Fighters, which is the far left party, and the party of our former president, Jacob Zuma, called MKP.
Right.
Those are the only options on the table. And there, I will say what I've said publicly before, and really not more than that. I think it would be a devastating development for South Africa to have a far left government of the EFF, and that we should do quite a lot to prevent that from happening.
Well, and we're also hearing concerns among investors on that front. When we talk about the Western Cape in particular, it is obviously one of the major provinces that voters are going to be paying attention to, investors are paying close attention to, and it's really touted as a stable part of the country. I mean, do you think the stability that you've been able to cultivate here is going to be enough to turn out voters on a national level?
I do think so. I think all the three biggest provinces in South Africa are this one where we're in, the Western Cape, one on the coastal east called KwaZulu-Natal, and then the central heartland called Gauteng. Those three make up well over 50, nearly 60% of the national voters' roll, and all three of them are hotly contested. None of them will have a majority ANC government. And that means voters in those three provinces are very motivated. If you go and speak to folks on the streets of Cape Town, they are fired up to make sure that this province stays DA. If you go and speak to voters on the streets of Joburg in Gauteng, they are fired up to go and vote and make sure that there is change in that province as well. So for that reason, I think that we are going to have a very good turnout in those three provinces. Because they make up 60% of the national voters' roll, I think that's going to drag the entire national turnout up in this election.
Well, and also the DA has been very successful in terms of political fundraising because
Yes.
we know a majority of asset managers are down here. Is that really where you see the majority of voters coming from?
Certainly not from asset managers. No, definitely not. Perhaps the majority of Bloomberg viewers, but certainly not voters. No, the vast majority of voters in this city and this province are ordinary middle class and working class people and many unemployed people. But it is true that the business community have seen the benefit of stable, pro-business, investment-oriented government here in the Western Cape, and so they do support that, and we're very grateful for that. And of course, that gets you into a virtuous cycle in which the state here, our government has more resources in which we can spend on the poor out there in the Cape Flats that we can see from this rooftop.
Right.
We want to spend as much as possible investing in better livelihoods for the poorer communities. And for that to happen, you have to have investment, you have to have support from the business community to drive up revenues.
How does Amazon then play into that? Because Amazon is making this their Africa headquarters.
It's extraordinary. It used to be the case that the city of Cape Town was the biggest employer in this city. After that, an asset manager called Old Mutual, who I'm sure you're familiar with. It's now the case that Amazon has overtaken Old Mutual as the second biggest employer in this entire city. More than 9,000 people here employed by that giant. And that's wonderful, an endorsement of the investability, the bankability of our city and our province. So we're thrilled with that. And that is being replicated. Of course, there aren't that many global giants of Amazon size, but it's being replicated at a smaller scale by dozens, hundreds of other firms who are relocating here because of the stability, because things work, because infrastructure investment's happening.
How does that then translate into more jobs? Because we know unemployment is an issue for this country.
It's the issue.
Yeah, 33%.
33% on what we call the standard definition. On the expanded definition, which includes those discouraged job seekers, it's 40% and above. So it is a massive issue. Here, of course, it's 15 percentage points lower. It's still too high. I think by global standards, 21% unemployment, which is what we have here in Cape Town, would still be considered a crisis. But it is tracking in the right direction. In the last 2 years, 360,000 new jobs in this city alone, more than all of the 7 other big cities in the country combined. And the way that we are doing that is by investing in basic infrastructure that attracts businesses here. Of course, we have things which we can't take responsibility for, chief among them the magnificent tourism sites around us this morning. But the tourism industry has boomed. Places like this, establishments like this are growing and creating new jobs. And businesses from upcountry are coming down here because they want a place that works, or they want a place with reliable infrastructure.
Well, and I'm glad you bring that up, because reliable is a lot of the question around energy, right, when we talk about South Africa. And you've been somewhat successful, I think, here in Cape Town, weaning off of the national grid itself. I mean, does that continue to make progress in terms of taking Cape Town away from Eskom? I mean, what is the plan there, and how do you then expand that nationally? Is that what should be, the DA should be focused on?
So South Africa has this phenomenon of load shedding. I'm sure informed viewers are aware of it. It's a euphemistic term for power cuts. The national entity, the national utility rather, Eskom, is unable to provide the power that we need at peak times. In the city, just in our city, that accounts for about 400 megawatts of shortfall at peak times. So we have said we cannot wean ourselves entirely off the national grid, but we can make up that gap, that 400 megawatt gap at peak times, that allows us to stop load shedding, to stop power cuts here in this city at least. And that is a huge attraction point for businesses. So we're roughly halfway through that. We can protect our city from 2 stages of load shedding. And I won't get into the technicalities of how the stages work, but just think about roughly 4 hours of power cuts per day we can protect our city from.
With green energy,
with renewable energy, with our own energy investments, overwhelmingly solar, but some other sources as well. The first city in the country, and possibly in the continent, so far as I'm aware, that is actually paying people for the power that they sell back to us from their rooftop grids, paying them in cash every month. So all of those investments are adding up over time where we can make up that utility shortfall.
All right, Jordan Hill-Lewis, Mayor of Cape Town, thank you so much for standing out here and braving the sun.
Oh, it's a wonderful day.
Really appreciate your time. Fran, back to you.
Jen, thank you so much. Bloomberg's Jennifer Zabazajo, of course, will be live from South Africa throughout the week asking what happens if the ANC needs to power share going forward. Now, plenty more ahead in our coverage of the South African elections. We'll be speaking exclusively to Patricia de Lille, the tourism minister and leader of the Good Party. That's at 9:30 a.m. UK time on the Pulse screen.
And coming up on this program, stocks to watch, including Julius Baer, people familiar, saying the Swiss private bank said to be exploring the acquisition of its rival EFG. We're going to bring you the details next. This is Bloomberg. Welcome back to Markets Today. We're about 15 minutes from the cash equities open. Now, we know the U.S. is closed. We know the U.K. is closed. But Europe is very much open and working today, just like me and my co-host Francine Lockwood today.
Always.
Fran, one of the stories that I'm obsessed with, we talked about this at the beginning of the show, is this T+1 worries that everyone has that we're going to finally make the system more efficient, but there may be some kinks in terms of getting it there. I thought it was fascinating that you actually have a lot of risks around this, that to kind of create a fail-safe for these potential failed trades that you mentioned earlier. It's why you can't get it to T+0, the settlement day to day. What stood out to you on that story?
Well, so I love that you're obsessed with T+1.
It's very wonky.
But this is basically, I mean, this started because of the meme stocks, right?
Yeah.
So when you trade, especially a stock, you have to have margin or collateral. And they're worried that the more this stays, you can actually fail, and so it makes the transaction impossible.
Yeah.
The problem is that, so you have T+1 in the U.S. If you're a European counterpart, you don't need to do that. So you're scrambling around to find dollars to be able to make that trade.
Yeah, it's fascinating as well because, and Jumana Bersechi, our Middle East anchor, brought up this point that in the bond market, it's always been T+1. So this is a strictly equity story. But if you look at the FX market, it's been T+2. And I'm interested, we're going to talk to Mark Cudmore, our Markets Live executive editor, in a moment, talking to us about what the ripple effects might be. It's interesting, though, that this meme stock story has now gone international 3 years later after it initially happened. And this is something that we've talked about with China, for example, the Chinese retail trade that's happened there. It hasn't been as much of an issue. But, of course, for the U.S., it's a little bit different.
Yeah, and as always, I mean, electronic trades, right, where you have the counterpart. I guess the concern is that it goes so fast that you don't see what's in the trade, so that there's something dodgy in the trade and you can't actually fix it. And I feel like it's always, you know, the forces at play. It's like if you go too fast, you miss stuff, but if you go too slow, then you could also default in the meantime. In China, I mean, they have quite a lot of penny stocks, a little bit, you would argue, a lot of the meme stocks, but then they actually can, you know, just stop some of those trades with much more force, I would say, than some G7 economies.
That's very, very, very fair. To me, I thought what was interesting as well is how, in the long term, there's some of the decisions being made, because it's not just about right now and how they're going to kind of tackle this week, but there's some stats that came out. Jefferies, for example, putting aside actually amount of money just to cushion any sort of things that may go wrong with it. Operational glitches, additional costs. But to me, what stood out is SocGen, for example, extending some of the hours of its staff. Citigroup moving part of its team to Kuala Lumpur for a Tuesday through Saturday schedule. Just to deal with this. I thought that was really fascinating. Francine, you and I can nerd out about this all day long. Let's bring another nerd into the conversation. Markets Live executive editor Mark Cudmore joins us this morning for his Market Minutes. Mark, it's all the rage on this set, this T+1 drama. From your perspective as a former trader, talk to us about the ripple effects. Is this what people are talking about this morning?
No, not really. Not frontline market practitioners. Look, it is a big issue for those who've got to settle these trades. It's a big issue for the industry. And of course, there will be some knock-on effects. But essentially, for the portfolio managers out there whose full-time job is to buy and sell stocks, even if they're having to think about their FX hedging dynamics, about that change in the settlement date, where they change in the swaps, sure, they're worried about the back office process. They're worried about their hedgings in place. But is it changing the dynamics of how they pick and buy and sell stocks? No, not really. So it's not for the frontline practitioners, even though it's a big issue for the industry overall.
But it feels like there's also an FX component to this as well, right? That there's a T+2 dynamic in the FX space. Talk to us about the trade in FX in preparation, perhaps, for this, at least in the short term.
Well, I mean, absolutely, it's going to affect how your swaps, and you're going to have suddenly a load of equities people who probably haven't paid attention to exactly how the FX exposure is hedged. And I shouldn't just say it's equities people. It could be emerging market traders in bonds. It could be a number of people in this market who haven't thought about that extra kind of settlement risk. And it's normally so small FX that people outside FX markets underestimate the cost of this, that it can add up over time if they're not doing it most efficiently. But these are kind of processes. We're going to get some headlines of someone messing something up, of a few settlements going wrong. But ultimately, people will square this. This isn't going to be deciding returns in the year. As I said, it's not going to be deciding overall decisions about which stocks you buy or sell or which bonds you buy or sell. It's just going to be getting people to be distracted on their settlement issues.
All right, Mark, I'm putting you on the spot. 20 seconds. What else are we watching in today's trade?
This week, it's really all about the inflation data coming through later on in the week. Today is obviously super quiet, but I think the backdrop themes are the same as they were last week, that we're going to continue to see higher yields. I think that overall, the dollar is going to continue to stay pretty bid. But despite that backdrop of higher dollar, higher yields, I think risk assets will do okay.
All right, Mark, don't go anywhere, because in addition to all the things you just mentioned, there's a chart that's catching my eye. As always, I'm going to bring it to you here. One of the themes that we've been talking about on this show in the last hour or so has been kind of this geopolitical thread throughout the entire show. And one of the big stories over the weekend has been, of course, what's going on in the Middle East, what's going on in Rafah, and, of course, the increased attacks on by the Houthis in the Red Sea. This is something that perhaps in the risk markets you're not seeing as much, but you are certainly seeing when it comes to shipping rates. And that's really the chart that caught my eye this morning. Of course, you can find it on GTV Go. It's just kind of pick up in shipping rates. As we saw the Red Sea attacks first come on, you saw this increase in those shipping rates. They came back down. You had the read across into shipping stocks like Maersk as well. We're going to discuss that going into the European Open, But you were starting to see a little bit of a pickup. Mark, come back into this conversation here. What are the ripple effects in a chart like this?
I actually had not seen this chart. It's a great chart, Kriti. Well chosen. I have to say, look, it feeds into the theme we've been talking about. Higher commodity prices are starting a reinflationary theme. We've gone through the base effects of the disinflationary theme to a large extent. So we already know that commodities are leading to higher inflation. And now you're showing those shipping charts as well. And I think this is an idea that overall inflation is going to be stickier than many people were hoping only 6 months ago. Now, obviously, a large part of the stickiness is the services component. But these charts, that shipping chart and the commodities charts generally will say that, hey, it's not just the services side. We're also seeing on the good side that we're seeing a bit of a reinflationary theme as well. It's the more volatile component, but it generally lends into this idea that many central banks of the world are going to struggle to cut rates, as people were thinking 6 months ago. And I still think that overall yields have higher to go, particularly in the US, where we need to be seriously considering that the next move might be a hike. I'm not saying it definitely will be a hike, but that needs to be a serious part of the conversation. And we're instead stuck on when the cut will be delivered.
Mark, good morning. There's also this news this morning that China has created this almost $48 billion chip fund to fuel self-resilience. I mean, is this really the front line of geopolitics?
I mean, chips are absolutely, I think, the front line at the moment. I think that's going to morph into much more of the AI conversation over the next couple of years. I think we know that the deglobalization theme and countries trying to be more independent on their supply chains has been the theme of the last number of years, 5-10 years, and it's only intensifying. It's not been a phase, not fading. And I think that summit between China, South Korea, and Japan is interesting in that context of trying to secure supply chains. But overall, there's a story. It's one of those creep stories we've talked about for a long time. It continues to be there. It's valid, but it's not a sudden binary tipping point at the moment.
All right, Bloomberg Markets Live Executive Editor Mark Cudmore joining us this morning. We thank you so much. You get more from him and the team on your Bloomberg terminal. Just type in MLIV Go, and you'll get all that analysis right up on your screen. I want to go from the macro to the micro. Fran, it's just you and me. Joe Easton is taking a well-deserved holiday. He's actually taking a holiday that we're supposed to be taking. But this is what he would do. He would look at the stocks to watch. I'm going to bring one to your attention here. Julius Baer is said to be weighing a potential deal for its Swiss rival EFG. This, of course, according to people familiar. Now, in light of that announcement, you already saw as the market kind of take it into account back on Friday, EFG shares, for example, were higher by about 1.2%. They're valuing the firm at about 3.8 billion Swiss francs. But of course, this goes into this idea of consolidation, capital markets consolidation. Is this a deal that actually goes through? Does it pass the regulatory scrutiny? When we know, of course, already in the Swiss banking space, we've already kind of gone through a reiteration of that, haven't we?
Yeah, I mean, bigger is better, it seems, if you're an asset manager, but you're also trying to stand out from the crowd. Now, we're also looking at shipping stocks. I feel like this is really what Kriti's passionate about this morning after she also did that wonderful chart on what shipping does next. But I picked something from Bloomberg Intelligence, basically saying that container rates have spiked 7.2% to fresh non-pandemic highs. And this, again, it's just on geopolitical tensions remaining elevated and liners continue to roll out general rate increases.
And that's going to be something that's a very kind of, we'll see if that actually moves in the European Open in just a few minutes, and whether or not that has a very quick read-through. Another stock that we've keeping an eye on. Speaking of transportation, I feel like Alstom falls into that as this kind of maker of trains, if we will. I tried to make that a smooth transition. They're right, issuing a subscription price about 13 euros a share, so a little bit of a dilutive story there as well. It does reflect a discount of about 25%. Again, we'll see if it trades at the European Open. Fran, in about 5 minutes time or so, we're going to see some of those European stocks open. Like I said, we're about 5 minutes out. The U.S., the UK is closed. It feels like there might be a little bit of a light volume story this morning as well. But of course, we're going to keep you apprised of all the stocks you want to watch. Futures pointing higher. This is Bloomberg. Welcome back to Markets Today. We're about a few minutes to go to the start of cash equity trading now. You're not supposed to say this on TV, but I think today is supposed to be a little bit of a yawn of a day when it comes to markets open, because the UK is closed, the US is closed as well, so the bond markets as well aren't trading. You're going to be seeing some very light volume, but Fran, there's plenty to actually talk about here. You were talking about the shipping stocks as well. We've got a few stories in the banking sector. Alstom is thrown in there somewhere. We'll be watching a lot of this stuff in a couple of minutes' time.
Yeah, and it's going to be a big week. So I feel like today, if you're at the beach, fine, enjoy it. Tomorrow, let's get back to work, because we need to figure out...
You say that with a little bit of bitterness, Fran.
No, the beach, I'm not a beach girl at all. Global investors are trying to figure out what the Fed does and what the ECB does. And we have so much data. It's so data heavy towards the end of the week that it's a good time to come back to the office to see what happens.
It is. And I think we kicked off the show with this, that there might be some sort of geopolitical string that comes through it. And that's why I think maybe the sector story is more important. Shipping stocks is one in terms of the read-through from the Red Sea and the Houthi attacks as well. Defense is another. We had Ollie Crook at the top of the show talking about this kind of consensus story out of Ukraine. Yeah. Macron's in Berlin right now. What does that then mean for, one, the banking sector, talking about that capital markets union, but as well, some of the defense story there as well. Do you see a more consensus take when it comes to Ukraine, the defense that Vladimir Zelensky is asking for?
Yeah, and it'll be interesting to watch Macron and Olaf Scholz also trying to divvy up some of the big jobs that you have at the Commission. Of course, we have elections for the European Parliament, and then you choose a president and of course, a commission and the chairman of various parliamentaries. And then, look, NASDAQ, record high on Friday, so I'd probably see if there's a read across for some of the European chips as well, or some of the European tech stocks.
And you mentioned the parliamentary elections. There's a read through into some of the state stakes for Spain, for Italy, for example. I'm obsessed with the Telefonica BBVA deal as well, because the parliamentary elections have a ripple effect in terms of the regulatory space. We are officially open across Europe. Of course, like I said, the UK is closed, so we're going to wait for some of those initial trades to read through. But when you look at some of the initial movers on the stock 600 here, you are seeing a little bit of a back foot when it comes to the healthcare space, for example, in terms of index contribution. Your Novo Nordisk, for example, is one of your biggest weights. Even though it's only down about 0.2%, we're still waiting for a little bit of that to shake out. Some of your big heavyweights as well. SAP, for example, is lower. I'm curious, Fran, if it's a little bit of your big movers, your big heavyweights, on the back foot this morning.
Yeah, I also think that, overall, looking at some of the we're probably in thin trading volumes because we know that a lot of the European banks also book their trades through London, which is closed today. So a couple of the other things, again, I would watch for any kind of clues about a strong, we had some strong company earnings. Now we're waiting for signals from U.S. officials about further rate hikes being unlikely. I don't know if there's a couple of other things that we need to watch out for. But you can see, look, European banks, there's nothing to write home about. They're kind of range bound. They're pretty much flat. Maybe some of the things that we need to watch out for: health down 0.3%, and then autos gaining 0.1%.
And I'll mention as well that from a sector point of view, Stoxx 600 technology sector is down only 0.1%. To your point, it's a little bit of a sleepy day. But ASML is your biggest index contributor on the Stoxx 600. Again, only higher by 0.1%. That speaks volumes as well. But your biggest kind of gainer or your biggest index contributor is ASML. One of your biggest laggards, your biggest weights is SAP. So you aren't seeing a consistent tech trade there, which is probably why you're only moving it as well. You were talking about some of the shipping stocks as well. Maersk higher by about 0.7%. SocGen is going ex-div up. It's also higher this morning. So that is a few of the movers that we have our eye on. But to your point, it is potentially all about that eco data. I would argue that the real action doesn't even happen until Wednesday, Thursday.
Yeah, and if you've seen at the month, so we're actually getting into June, and the last month was extremely volatile, and frankly, we're a little bit all over the place in terms of Fed expectations and also BOE expectations. The ECB, I think they've managed to walk that through, and communication has been clearer. Yeah. And again, that's what's really moving stocks after the strong earnings results.
Moving stocks, then you've got kind of the ripple effect through. It's moving the bond market. If bond yields are higher, that affects valuations. And it's funny that we're in this kind of environment where do we ask ourselves, does valuations even matter? Well, we asked Alex Stanich of Artemis Investment Management that very question last week. Take a listen to what he had to say.
Valuations are always relevant. So if you look at the spectrum of global equities, there's again a huge spread between what's working, what's highly valued on a high multiple and what's not. So I think there's a wealth of opportunity out there, but you have to dig a little deeper than just maybe some of the more exciting stocks that people know well. We see some tremendous valuations of equities.
Dig a little deeper. That's the message from Alex Stanich when it comes to the valuation story. Let's bring in Dan Scott, head of multi-asset over at Vontobel. Dan, a pleasure to have you on this holiday, actually. Good morning. Thank you so much for joining us. Your take on valuations, when you're looking at the bond market, the equity market, where is fair price? Where is fair value?
So, first of all, I wanted to follow up on do valuations matter? Of course they do. We always monitor valuations as part of the investment process for everyone, clearly. But I would say, in terms of timing, they rarely matter. Because unless you're trading, one or two standard deviations above or below, valuations are rarely the trigger to take profit or for the market to turn in either direction. So I don't think you should be looking at valuations for a reason why the market would sell off. You can continue making new highs even if valuations are already rich. And if we're looking at fair value for the U.S., I'm not sure I want to lean out the window here and start making targets for various indices, but I would not be surprised if we have another good 5% to go on global equities if the earnings momentum continues as the way it does. Because while a lot has already been priced in, what you've seen with Q1 earnings is that companies managed to maintain their margins. And in fact, the earnings revisions from the sell side have bottomed out. And if anything, they're starting to improve now. We haven't started to see aggregate earnings upgrades yet, but there definitely has been a pickup in economic momentum, especially on the manufacturing side. And that's allowed us to see a bit of a broadening in the markets away from, just this pure tech dominance.
Talk to us about that broadening of the market, though. It's something that a lot of people are citing as kind of finally this economic strength showing up in this market. And yet you still have plenty of people kind of calling the end of that. They're saying this is more of a momentum trade as opposed to a real sign of economic resilience. Dan, is momentum still driving this market?
For sure. I mean, if you look at the factor performance year to date, momentum is by far the best performing factor. So momentum is definitely an aspect of this market. It continues to be driven by also liquidity. We talk a lot about inflation and when the Fed can cut and, those aspects to market drivers also on the valuation side. But one thing that, people seem to forget is that not only have we had a delay of QT, You also still have indirect stimulus measures from the Fed. The term funding program is basically an indirect stimulus for the market. So those things continue to drive asset prices. And it's the reason why you have the very unusual situation that global equities are hitting, all-time highs at the same time as gold is hitting all-time highs. I mean, you have a risk-on and a risk-off asset, both at all-time highs. That shows that there's still quite a bit of excess liquidity in the system.
So, Dan, good morning. Does it also mean that U.S. stocks are now priced to perfection, certainly after we saw NASDAQ at a record high following the NVIDIA earnings?
Yeah, I'd like to have a simple answer here. From a positioning perspective, we just had the decision of our investment committee on Friday last week. We communicated that we are maintaining our overweight U.S. equities. And I have to say, every month for close to a year now, we've been discussing, isn't it now time to start taking profit on equities? And we still don't think that we want to do that. We want to maintain a modest overweight on U.S. equities because we see them as a defensive positioning within this equities overweight. Having said all that, I think that consolidations like we saw in April are increasingly likely, that you're going to see some short-term consolidations, that the market no longer has, the steepness of the upward trajectory as it did earlier this year. And likely you're going to see, only modest gains from here on out with increased volatility because, like you say, as these earnings revisions have bottomed and start improving upwards, we're really looking at an environment where it's difficult for companies to surprise to the upside.
But Dan, you mentioned gold. What's the function of gold right now? So is it still a hedge against inflation, or is it actually central banks around the world trying to test U.S. exceptionalism?
Yeah, so I guess a bit of everything. I mean, we have it in our portfolios. We've had it as an overweight for a very long time now, gold. For different reasons. We had it as an insurance policy to hedge against geopolitical risk, and it still does work very well when you see spikes in geopolitical risk. Gold does provide some convexity to the portfolios. Like you say, longer term, it's also a decent inflation hedge. And then, also, like you say, central banks around the world, non-G7 predominantly, have been increasing their holdings in gold. And we're not talking about just the Russian central bank, but also the Chinese and the South Africans and the Indians. So, central banks from around the world have been increasing their gold holdings. Now, who hasn't been increasing their gold holdings are financial investors, actually. You've even seen some outflows of gold-backed ETFs, for example. So those holdings remain low. And I'd say that once interest rates start coming down, you're going to start to see financial investors start piling into gold more as well, because then you have, a diminishing of that opportunity cost in holding gold as, of course, your yield starts coming down on fixed income assets.
Well, speaking of that yield, let's talk about one of the key kind of events that are happening this week in particular. On Wednesday, I believe the buybacks from the Treasury start, plus combined with that quantitative tightening tapering that you were talking about as well. Does that create a floor or ceiling when it comes to yields?
So I think the main driver for yields has to be the expectations on what the Fed's going to do. I mean, this has been one that's changed quite a bit. I think it's quite historic, the amount of rates vol that we've had, considering how we went into the year and the market was pricing, close to 8 cuts. And now we're pretty much, pricing out any rate cuts. The dot plot shows us 2. We'd probably also expect 2 because we do see initial signs of a slowing in economic momentum, a weakening of the U.S. consumer. And we think that it's unlikely that the U.S. is going to be able to escape, even if it is a very small one, escape a recession by the end of 2025. So even though those things keep getting pushed out, there is that ahead of us. So that is really what's going to drive yields. And I'd say with a handle of 4, it's still something that on the 10-year, it's still something that you can lock in, comfortably. And we think is a pretty good thing to do, which is why we're also overweight government debt here. We wouldn't necessarily be expecting goods returned, or we don't think that the reward you get is compensated, or the risk you take is compensated by the reward you get by taking extra credit risk. So we wouldn't expose ourselves to high yield, for example, because I think the likelihood that spreads widen there as you start seeing insolvencies and a slowing of those companies that have rate sensitivity that's likely going to be something that is, a pain point for fixed income investors.
Dan, so given all of this, are you going to see more support for dollar, and how much pain will that inflict elsewhere, either in asset classes or emerging markets?
Depends on the time frame. So dollar definitely had a bit of a surprise weakening as far as the market, strengthening as far as the market was concerned, because rates not coming down as fast as the market initially expected. But on a longer term view, for sure, the dollar weakening story continues. I mean, the dollar has been weakening against safe haven currencies for decades now. You just need to take a look at, a long-term chart, dollar Swiss franc, and it's very clear what the dollar is doing. It's weakening. And I think that this is part of the game plan of the Fed anyway. It's, inflating your way out of debt is one part of the way to solve the debt issue. Raising taxes is going to be a much more difficult one for politicians to really stand behind, because it's political suicide. And the other way is to grow your way out. So I think they're going to try and have a mixture of all three, but definitely letting inflation run a little bit ahead of the official targets is a very neat way to reduce that debt burden.
That seems to be the story plaguing everyone, from Dan Scott over at Vontobel all the way to Bill Gross over at PIMCO. We thank you so much for your insights this morning, Dan. A pleasure to have you on the program. We're going to go from the bond market, though, and talk about this equity market again and bring in our sensational six. These are the stocks, the big heavyweights that tend to drive the market. Of course, Guy Johnson is obsessed with these six names. Today, I channel him to the best of my ability. You're mostly seeing them on the back foot. Novo Nordisk down about 0.3%. I would call that your biggest mover. The rest kind of shrugging their shoulders. ASML, for example, virtually unchanged. Your ones in the green, though, are very much luxury stocks. LVMH higher by 0.2%. Ferrari higher by 0.3%. But that's kind of your biggest move. The fact that 0.3%, Fran, is the biggest move on either direction that you're seeing speaks volumes about the volume in this market.
Yeah, I love that. I love the sensational six. I mean, this is something that also Citigroup came up with, right? That there's so much of the Magnificent Seven in the U.S. is that we have similar plays, except LVMH and even Ferrari had spots of trouble because of what's happening in China. So it's an interesting play to see Schneider Electric. I mean, this is a pure play on the green transition, one which is extremely interesting. As you say, low volumes, a lot of traders off, also because a lot of the trading that's booked from London for the U.S. actually wouldn't be on today. Right, let's look at shipping stocks.
Let's look at shipping stocks, because that may be where we're seeing a little bit more green on the screen, a little bit more movement here. A.P. Moller-Maersk, of course, is one of the ones that we're keeping an eye on, higher by 0.2%, in light, by the way, of increased attacks in the Red Sea by the Houthis. Hapag-Lloyd pulling back a little by about the same margin. But you are seeing the likes of Frontline, for example, or DS Norden higher by almost 0.5%. So that's where perhaps your more high volatility movers are in the shipping space. It's not the only mode of transportation, however, we're looking at.
It's not, because let's look at Alstom now. Alstom, big stock over in France because it makes trains. We know that they had a big capital raising. Again, it's tried to shore up its balance sheet, I would argue, for the last 2 to 3 months. They've had some pretty strong continuing problems stemming from the acquisition of the Canadian rival Bombardier. So they haven't had it as easy as they would have wanted to. I know some of the negative free cash flow for the year was lower than expected. Some of the main shareholders also pushing back against that. And Alstom today gaining 1%. Again, after that capital share, but they also need to slash some of the costs, so we'll see how they do in the next couple of months.
The fact they're seeing a 1% gain on any stock, I think, is pretty impressive for Alstom
today.
This
Bravo.
Morning. There it is. But then again, a similar margin of moves to the downside when you look at the Swiss banking sector. Julius Baer catching our eye this morning, down by about 0.8%. This is right next to EFG as well. They're exploring a potential acquisition of that private bank. Together, all in all, 500 billion francs in AUM, assets under management. This would continue that consolidation story that you were talking about. We know, of course, we watched it very closely with the UBS, Credit Suisse. We'll keep an eye on the regulatory front as well to see if this deal does actually go through.
Yeah, so we'll talk about some of the corporates. Also coming up, a European Capital Markets Union takes center stage as leaders of two of the EU's largest economies meet up. We're talking about Olaf Scholz and Emmanuel Macron. They have this difficult relationship, and it's been really at the center also of the EU struggles to find unity on issues from military aid to Ukraine. So we'll have plenty more on that shortly. That's next, and this is Bloomberg.
This is Markets Today. We're about, we'll call it 20 minutes into the European trading day. Very light volume. You can see it on the Stock 600 there, virtually unchanged. But you are seeing some individual movers. It feels like the real news, at least for this market, is going to be coming out of the geopolitics. We go right there. The German Chancellor Olaf Scholz says that the creation of a European Capital Markets Union will be a priority during meetings with French President Emmanuel Macron. President Macron is, of course, in Germany on a state visit where he will attend celebrations marking the 75th anniversary of the German Constitution, as well as hold a joint cabinet meeting on Tuesday with his German counterparts. Let's get more on this story. Bloomberg's Christoph Rowald is joining us this morning. Christoph, talk to us about what else is on the agenda here.
Yes, good morning. The Capital Markets Union, as you mentioned, will be one of the talking points, of course. At the same time, I think it's fair to say that the Capital Markets Union has been a talking point for quite some time, for many years, and the progress has been pretty muted so far. So any concrete results on that will be sort of closely watched. The other, I think, sort of like bigger and probably more sort of urgent question they will need to sort of address is the security question, the question on how to supply Ukraine with aid and how also to finance all the military equipment that European countries have been providing to Ukraine.
So, Christoph, how much of this is personal? So we know that the two leaders have had not the best of relationships. Is that really at the forefront of the difficulties in finding the Capital Markets Union and finding funding for Ukraine, but also trade with China?
Yeah, I think it's a very good point. I mean, they're both Scholz and Macron have been sort of trying to talk down the sort of impression that maybe their personal relationship isn't as good as it has been between Macron and the former German Chancellor Angela Merkel. But at the same time, I think it's also pretty clear that people now expect some concrete decisions to be made to really make some progress in some of the projects that we discussed before, the Capital Markets Union, and in particular, the urgently needed aid for Ukraine.
Christoph, the sticking points, just to build on Fran's point here, what are the sticking points? Where could this kind of tone of cooperation go wrong?
I think the sticking point, particularly regarding the financing of the military aid for Ukraine, is basically if that would be done in a European context. The French side has floated the idea of some joint borrowing. That is something that has faced opposition in Berlin. So I think it's going to be pretty interesting to see how that's going to pan out and if they can actually reach a breakthrough and basically get on the same page there.
Thank you so much, Christoph Rowald, there with the very latest. I mean, I think it's the first, actually, state visit since Jacques Chirac. So that was, it feels like a million years ago, but it was only a quarter century ago. Now, let's, Stone, of course, continue with politics, but go to the Middle East. And the Hamas-run health ministry says at least 35 Palestinians have been killed in an Israeli airstrike at a camp for displaced people in the southern city of Rafah. Now, the strike came 2 days after the ICJ issued a ruling ordering Israel to halt its operations in order to spare civilians. Well, Israel said it carried out the strike based on precise intelligence. Let's get more now from Bloomberg's Paul Wallace in Dubai. Paul, what do we know about the strike and what do we know what happens next?
Hi, Francine. Well, the Palestinian authorities are now saying they've just come out and said that more than 40 people died in the strike on the outskirts of Gaza, on the northwest of the city. Israel says it's investigating. It says that there was a strike in the area, but that it was very precisely targeted. The Israel Defense Forces are implying that a fire might have broken out near where the strike took place, and that might have spread very quickly, essentially saying that they don't think they actually fired missiles on this particular area, but maybe a fire from a strike on Hamas on Hamas sites caused this. But it just shows it underscores the strike, the fears, how the fears of many countries in the West and throughout the Arab world are potentially coming to fruition. The US and most other countries around the world do not want a full-on assault of Rafah, which Israel says is still coming, because they feared mass casualties among Palestinians. This certainly won't have helped Israel's case, whatever the precise cause of it was, whatever the precise cause of these deaths was. I think this will just be used as evidence by a lot of countries around the world that Israel should not launch a full-on attack of Rafah.
And Paul, just for balance here, when we talk about the Israeli response, they've really stuck to their line that these have indeed still been targeted attacks, and that they had, at the end of the day, interpreted the ICJ warning as that they could still go into it as long as they were indeed strategic and targeted. What changes the tone here now? In the coming days, is there a red line from the international community that Israel and its peers in the region should be paying attention to?
I think it's very hard to see any kind of red line emerging that will force Israel to stop. Israel, and from Prime Minister Benjamin Netanyahu to the rest of the war cabinet to other members, other politicians within the country on both the left and the right, to generals in the IDF, they have been absolutely adamant that an attack, a full-on attack of Rafah has to happen because it's the last bastion of Hamas. They think that there are about 4 brigades still there. That equates in their thinking to about 5,000 to 8,000 fighters. So they're essentially presenting this as the last battle that has to happen because Israel, as a state, cannot leave those several thousand fighters in Hamas still standing. It has to continue the war until they're either destroyed or they surrender, which looks very unlikely. The U.S. has never said that it won't support any invasion whatsoever of Rafah. It said that it won't support one if civilians aren't moved out beforehand. Now, before Israel started moving into the outskirts of Rafah a few weeks ago, there were probably 1.4 million civilians there. They'd mostly fled from other parts of Gaza, often at the urging of the Israeli forces who were concentrating on the north of the Gaza Strip initially. Now, Israel says that more than 1 million civilians have moved out of Rafah, so that, give or take, that leaves 300,000, 400,000 civilians. That's still obviously a lot. If they aren't moved out, and Israel still decides to send, forces into the center of the city, and there are big battles there, I think that is going to just strain the U.S.-Israel relationship even more than what we've seen so far.
Paul, thank you so much for, of course, the update on everything that's happening on the ground. We also understand the negotiations over a Gaza ceasefire seem to resume this week. Coming up, the G7 ramps up criticism of China's trade practices. More on the escalating dispute just ahead. And this is Bloomberg.
This is Markets Today. We're about 30 minutes into the European trading day. Net, a little bit of a yawn, even though you are seeing a little bit of movement when you look at some of these individual stocks. But you are seeing kind of the geopolitical theme perhaps taking the front foot. For example, shipping stocks seem to be seeing a lot more volatility than your other individual movers, which brings us to one of the more kind of geopolitical stories we're watching this morning. China's foreign ministry saying that G7 nations are hyping up the nation's overcapacity issue. It comes after the group's finance chiefs intensified criticism of China's trade practices in a joint communique published after the G7 meeting in Italy. They accused China of hurting the economies of trade partners. Let's get more on the story with Bloomberg's Oliver Kirk, who has been covering it for us. Ollie, China, of course, a big part of the discussion of the G7. What do we get out of it?
Yeah, it was really thrown into prominence by the fact that Joe Biden and the administration really put up all these trade barriers just a couple of weeks before the G7 finance ministers met down in Stresa. And of course, we're waiting for the EU to do something very similar with EVs probably being announced next week. And really the discussion has coalesced around China. And for the G7, with these sort of tit for tat with the US acting and Europe acting, the G7 was sort of an opportunity for them to get on the same page and kind of give a sort of coordinated message to China, which I think was fairly succinctly and well summarized by the French finance minister, Bruno Le Maire, with whom we spoke to on the sidelines of the event. Have a listen.
We agree at the G7 level that we have an issue with the Chinese industrial overcapacities. And this is not a question, anything against China. China is an economic partner. But we have an issue with the economic model in which China is producing more and more cheaper industrial devices, because it could be a threat not only for the EU, not only for the US, but for the global world economy.
And this was for them sort of an opportunity to get their message out together because, of course, the second that U.S. throws up trade barriers, a lot of that overcapacity can just be diverted over to Europe, which is exactly what we saw happen with solar panels. So, again, the idea is to try to get on the same page. And if the fear was that there might be a sort of trade war brewing in the distance, I don't think that the rhetoric from the G7 minister did anything to allay that fear.
So, Ali, Ukraine, of course, the other big topic. Was there an agreement on what to do with the frozen Russian assets?
Yeah, so Francine, sort of in theory there is an agreement, but of course, as we know, the devil is always in the details, and getting the sort of technicalities through is really what the struggle is going to be. I was a little bit surprised that the technicalities would actually present such a hurdle. I mean, we spoke to the Chancellor of the Exchequer, Jeremy Hunt, about his position and what the UK wants to see out of this situation here with the Russian frozen assets. Have a listen.
The G7 was absolutely united in its support of Ukraine, and it always has been. But I felt that it was stronger than I've seen it before. And I think that needs to send a very big signal to Putin that we are not going to let him succeed.
But there's a question about putting sort of your money where your mouth is and really getting that architecture in place for G7 leaders to sign off on this. And remember, Francine and Kriti, there's a meeting in only 2.5 weeks, so they need to resolve all of those technical issues if they want to secure that funding for Ukraine, not just this year, but for next year, particularly with the U.S. election looming on the horizon. Part of the ambition here for many of these leaders was to sort of Trump-proof the aid to Ukraine going forward.
Yeah, it's a really interesting dynamic. Of course, I think there was also some sort of agreement about a drone wall between Finland, Norway, and some of the Baltic states. We're going to be watching, of course, the defense story very, very closely. Bloomberg's Oliver Kirk, we thank you so much for that crucial coverage. For more on this, let's get a little bit more insight. Managing Director of Global Investigations over at JS Held, Olivia Paggi, joins us right here on set. Good morning. Thank you so much for coming. A lot going on in these G7 discussions. What's top of mind for you? What maybe makes a bigger difference here, the China rhetoric or the Ukraine rhetoric?
I mean, for me, the Ukraine rhetoric is really something that we've never really seen before, right? Can Western countries, do they have the legal right to use these assets and use them against Russia? This is really unprecedented territory that we're navigating here.
And talk to us about kind of is it just the financing story, or is there a question here of leadership? Is there a question of who really leads the charge in some of this?
I think that it's very important for the G7 to really show a united front right now to Russia. It comes at a really critical time. Russia seemingly has the upper hand in the conflict. They've geared up for a war economy. They're clearly in it for the long term. And they have China now giving them dual-use equipment. So it's a very important time right now to G7 to show that we are united, that we can actually fund Ukraine.
So, Olivia, if they basically converge on this U.S. plan to squeeze value out of Russian assets, I think they get about $50 billion. And it has a huge advantage that it's apolitical. So no matter who gets into the White House, at least it's money that can be used with the Russian assets, basically. How much does $50 billion give Ukraine?
I mean, right now, it's very important timing, certainly because it seems unlikely that the U.S. would give other aid packages, certainly not before the election. So as we talked about before, it would certainly give them a lifeline until the end of the year, possibly more. But the real question is that what kind of message does that send that Western financial institutions are willing to play politics and take assets from other countries? What kind of precedent does this set?
Yeah, and again, there's so many questions about the exact mechanism of the loan, the size of the amount, what's to be raised up front. And I guess if you're, maybe a non-democratic state that does business with the U.S. or with G7 countries, you kind of wonder if you need to rearrange your finances.
Absolutely.
Right?
That's a key question, right? Because who's next? If it's first Russia, then could it be China? Could it be Saudi Arabia? What's next? And the other key question is also on how this money gets spent, right? There's a number of governance questions in Ukraine right now. How is it going to be dispersed? Who's going to oversee it? Are there corruption issues, right? Because there's been a lot of issues in Ukraine right now, a lot of investigations into how money for reconstruction can be built. So there's also a question on if the money's spent, where does it go?
I find it fascinating as well that we're talking about this when we know there's no more aid coming out of the States, and there might not be for a while. Oliver Crook was talking about that kind of Trump-proofing element of the economy. A lot of the focus in terms of spending that aid seems to be going on defense right now. Is there any of that allocated towards the kind of markets? When I know this feels weird talking about it in wartime, but kind of the markets in terms of attracting investment that's going to last the next 10, 20 years?
I mean, certainly, there's a lot of talk about the money also being used for reconstruction. And actually, in a lot of the legal issues, there has been discussions whether it can be used for reconstruction or just for military. And that's also key in the detail. Certainly, there's more legal arguments that it's more acceptable to use the money for the reconstruction of Ukraine in the medium to long term versus just arms.
But it feels like there's so many risks with that, right? Of course, like you spend all this money, you build something that could sadly be destroyed while you're in wartime. What does that then mean in terms of some of the support from its allies? I'm talking about Poland, for example. I'm talking about the grain infrastructure. Your thoughts on that?
I think there's really a lot of political messaging around this also. So, I mean, the G7 coming together, this is really, I mean, it's not so much yet around the details of the specific infrastructure. I don't see that as yet. It's really about showing Putin we are united. And that's been a key problem up until now, is that there's been a lot of rhetoric about defeating Russia, but actually in the concrete actions, we've seen aid packages, but we've seen how divided it is, both in the U.S. and in the EU.
Yeah.
In the EU, we've had Hungary. In the U.S., we have Democrats fighting each other against Republicans. So I think this is where we are at the moment, rather than the specific infrastructure projects that the funds could be allocated to.
Olivia, the markets are largely ignoring the EU elections coming up, but we see certain movements like Marine Le Pen's party trying to reach out to the Giorgia Meloni party. Is there a worry that actually we're underestimating the kind of the profound changes that we could see from the EU elections if we have a move to the far right?
Absolutely. I mean, this is something that we really need to be discussing is that Europe and the U.S., they are not that united on what to do with Ukraine. And there's huge political instability in both of these blocs that could certainly impact the outcome of this conflict. And there's a number of trade-offs. There's a lot of parties that do not want to make the political trade-offs in supporting Ukraine. And this is going to have a key impact on the trajectory of this conflict.
I mean, G7 were quite hard on China. I don't know whether that was expected.
I mean, look, China, I think what is clear is that there is a major containment policy against China, and it is a bipartisan issue. There is a lot of talk that Trump is the one who supports trade wars, but certainly when you look at the rhetoric coming out, it is a bipartisan issue. Both Biden, both Trump, both parties are really looking to contain China, and that's a theme that's going to be here to stay.
Olivia, how much of this is all a moot point, given that both the U.S. and a lot of the countries in Europe are talking about these massive debt issues? At the end of the day, there isn't that much fiscal room to actually help, even if the heart's in the right place.
I fully agree with that. And I think that there is we need to really get into the detail, even when we are talking about Ukraine. I mean, are these countries willing to divert funds from healthcare, from, our own systems in order to support Ukraine? That is a big question.
Where do you see the U.S. election going? The $1,000,000 question, Olivia. I'm putting you on the spot.
I'm not going to say.
It's a Monday morning. That's not fair.
not quite willing to, but certainly let's say it's very close, right? And even we just had a geopolitical conference. There's even talks that it could not be Biden or Trump. So there we go. We could see Gretchen from Michigan coming out. So we don't really know.
You see, that's what we need on a Monday morning. Everyone's suddenly awake.
A third candidate.
See, big volumes, but everyone's awake after that bold call from Livia. Livia, thanks so much for joining us. That was Managing Director of Global Investigations at JS Held, Livia Badji. Coming up, South Africa's president urges people to turn out in the country's general election. We're live in Cape Town ahead of Wednesday's poll. This is Bloomberg. This is Markets Today. We're 44 minutes into the European trading day. You can see thin volumes. A reminder, of course, UK markets are closed, US markets are closed. And in general, European shares seem to be struggling for traction after the ECB official, Mr. Philip Lane, also warned that policy will have to stay restrictive through 2024. Now, let's talk about aviation. And 12 people were injured after a Qatar Airways flight hit severe turbulence over Turkey. Now, the Boeing 787 landed safely as scheduled in Dublin. It comes less than a week after turbulence forced a Singapore Airlines flight to make an emergency landing. One passenger and dozens of others were injured in that incident. Now, let's go straight to Bloomberg's Benny Camel, who leads our aviation coverage. Benny, what more? First of all, good morning. What more do we know about these incidents?
So we do know at this point that it was less serious than the one that you referenced. This was the Singapore Airlines flight last week, where we actually had one fatality and a lot of very severely injured people. Luckily, this time, this flight happened yesterday. It was going from Doha in Qatar to Dublin. It was less serious. Nevertheless, a very scary experience for everybody involved. The plane, a Boeing 787, briefly hit turbulence over the Turkish airspace. And what happened is that people who weren't sort of sitting with their seatbelts fastened, principally the flight attendants, briefly got sort of catapulted into the air and hit the cabin ground again. So people hurt, but not severely, but very much a very scary incident. And again, you know, this is something that is now very much in the public eye. People are looking at this. It's a sort of a case where previously maybe these types of incidents would not have been widely reported, but there's a lot of sensitivity around this now.
Benny, what does that, just put this into some context for us. Is there a reason that these kind of stories are coming up now? Are there certain routes that we pay attention to less or more that are perhaps affected by this?
Well, I suppose, well, number one, people probably shouldn't be scared to get on a plane. You know, we did, and this is something that we've picked up over the last couple of months. We have seen people being a lot more sensitive to aviation incidents since the Boeing accident, I should say, on January 5th. And then people pay a lot more attention to what kind of plane they're getting onto. Has there been a history of incidents and so on? This, I would say, is more a case of bad luck, that we've had these two cases in rapid succession. What people can do, and this is something that airlines do urge people generally to do, is to keep their seatbelts fastened, even loosely, when they're in their seat. But obviously for flight attendants who are moving around the cabin, serving food or sort of looking after people, this is more difficult to enforce. And it will be interesting to see how going forward these incidents, unlucky that they might have been, might change legislation in the air, that airlines will actually have a more sort of stringent enforcement of seatbelt rules, that people really have to keep them on rather than opting to keep them on. So that might be one possible outcome.
Yeah, I was going to ask you, Benny, because I think it's changed the way Singapore Airlines run some of their routes. So are there particular routes that are more prone to this? There were a couple of stories saying, look, climate change will exacerbate some of the turbulence going forward. So does it change the economics of any of these planes or not?
Well, the planes themselves are, you know, they are built to withstand these kinds of turbulences. So for them, there's really no risk here. What people should be doing, as I said, is keep their seatbelts fastened. And I don't think people or airlines will stop flying certain routes. But as you say, we have a case where we have global warming potentially contributing to this situation, in that we have different layers of air. Some are hotter, some are colder, and the changes in these temperatures are sort of changing the dynamics of the airflow, and we have what's called high altitude turbulence, clear air turbulence. So turbulence you can't really see. It's not like you're flying into a thunderstorm or through thick cloud where you might expect this. So it's perfectly clear sailing, and suddenly this happens. And this has to do with sort of tug of war between these different air layers, simply put. Something that the industry obviously will be watching. We're heading into the IATA annual general meeting at the end of this week, and I imagine, given these two incidents, that's something that airlines will start discussing and will start talking about. So we'll report from that, but it's definitely a point that might change sort of the dynamics a little bit in terms of which routes are taken and where there's more caution.
Our very own Guy Johnson, I believe, reporting from the IATA conference. Benedict Campbell, we thank you so much explaining the different air dynamics to us, Fran. Fascinating stuff. Let's take a look at what else is coming up in this week ahead. Monday, of course, we know those U.S. and UK markets are closed today. But Tuesday is when, again, we continue to have this theme of geopolitics. This EU Foreign Affairs Council meeting on defense does conclude Wednesday, plus the South African elections. Is there a market read-through from that? We'll talk about that in just a moment. Plus, of course, the Fed Beige Book is going to be coming out. On Thursday is when the data deluge really kicks off. Euro area economic confidence, unemployment, U.S. initial jobless claims, wholesale inventories. There is plenty to keep these markets humming and perhaps very, very volatile. So we will bring you, of course, full coverage of that live. Plus on Wednesday, I'll add, going back, the buybacks from the Treasury do begin. So we're going to be talking a lot about that story. I want to bring in a true expert here. Bloomberg's MLive strategist, Ben Ram, joins us this morning from Dubai. We talked a lot about my obsession at the start of the show with the T+1 story. Then Mark Cudmore came in and said, that's not a thing. Well, let's bring up my second obsession here, which is, of course, those Treasury buybacks. How much of a difference does that make to this market come Wednesday, Ben?
Morning, Kriti. It's not going to make a humongous amount of difference. It's going to make a marginal difference in the sense of providing liquidity to a market. Now, these are bonds that have gone off the run, so there's not too much trading. It's not easy to trade bonds that have gone off the run. So buying them back would help revive the trades there and provide liquidity and a liquidity backstop for investors who are still holding those bonds. But it's not going to mean a whole lot of difference for, if you're asking about yields, it's not going to make a whole lot of difference from here.
What will make a difference then, Ben? This week, going into this week in the trader playbook, what's the game changer for you?
The game changer is the core PCE. I mean, 2.8% is what the markets have penciled in. And if we are going to get anything like that, look, I mean, if your inflation is bobbing around 3%, where is the room for the Fed to cut rates? A lot. The markets are thinking at the moment 1 and fractional cuts by the end of the year, and that looks about right. I mean, if your inflation is going to be 3%, and if your economy is growing by 2.1%, which is what the Fed's estimate is, then you really are looking at a 10-year yield around 5%. We are around 450 now. So the markets are already trading at a considerable premium to where inflation is, relative to where growth is. So it's hard to get excited by duration just yet for that reason.
But Ven, in what kind of, and good morning, it's Francine, what kind of a U.S. economy will the Fed cut rates into?
Morning, Francine. I think that, the Fed is looking for the first sign of distress in the economy, and that has to perforce come from the labor market. The Fed thinks that, the labor market needs an unemployment rate of 4%, north of 4%, for them to start cutting rates. We are just bobbing around 3.8, 3.9%, which if you go out into history, it shows that, those are pretty good levels. That means that the economy is doing pretty well. So here is a Fed that is looking to cut. They want to take the rate to a less restrictive level, but unfortunately, with the labor market so strong and inflation refusing to travel the last mile of disinflation, it just makes life very tricky for the Fed, and that's the dilemma they are caught in at the moment.
Ven, I want to ask you about the European Central Bank. So it's pretty much on track to start cutting interest rates next month. In fact, June 6th, I feel like that figure is tattooed to our brain. What happens after that? Philip Lane also spoke to the FT saying, look, it'll have to probably be in restrictive territory all year. Is that because they don't know the inflation pattern, or they just want to be really careful?
I think it's a bit of both because, if you look at the negotiated wage pay last week, it was 4.7%. That was supposed to decelerate. Instead, it accelerated. If your wage growth is rising by give or take 5%, it's hard to say that inflation is going to crumble to 2%. So I think what happens with the ECB beyond June is what is interesting for the markets. And I think that if I had to put my own money on it, I would say probably September. And there is some chance of a cut in December. But they are not going to go in back-to-back meetings, that is for sure. Whether or not they cut in December will come down to what the Fed does with its policy. If the Fed is going to feel increasingly constrained from cutting rates, then perhaps we'll only get 2 rate cuts from the ECB this year.
Ben, what does that then do to euro dollar here? We had someone from DZ Bank earlier this in our show talking to us saying that, well, parity is part of the conversation, but it's not the base case here. Yet 108 on euro dollar doesn't quite make a ton of sense given these consensus views. Ben, what is fair value for the euro right now?
I think the euro is trading more or less near fair levels, Kriti. I think that, what will get very interesting for the euro is when the U.S. economy goes south. I mean, if the unemployment rate ticks higher in the U.S., I think that will give the euro bulls fodder. At the moment, the euro is just, trading around the ranges. And, much of what has happened with the euro, as with the yen, as with the Swiss franc, is all about the dollar side of the equation this year. And that will continue until the U.S. economy turns pear-shaped. If that happens, the euro and all the non-dollar currencies will surge, but they are just waiting for the starting gun yet. It is not to be found just yet.
Ven, because of the UK elections, July 4th, and the fact that we're not going to hear from anyone on the MPC or Bank of England until then, does it delay any possible cut?
Well, I think that the BOE is not going to admit to that, but in any case, the stronger than forecast April inflation numbers meant that June was anyway off the table. So I don't think there was going to be a cut in any case. And now it just makes the fact that we have got an election around the corner just makes it even less of a likelihood. So I don't think June is, the markets are looking at June as a real possibility.
All right, Bloomberg MLI's Ben Rahm taking us a little bit of a tour around the world via central banking. We thank you so much for walking us through that. I think the BOE seems to be the main question here, right? It feels like there's a lot of consensus around the ECB and the Federal Reserve, but the UK is kind of doing its own thing from a fiscal and a monetary perspective.
Yeah, what's interesting is that there's been so much pushback from traders in saying actually there's been so much communication that's conflicting from the BOE. It'll be interesting to see whether, because they just look at the data and don't have speeches, it'll be easier for them to read with this economy. But you're right, look, it's a small open economy and it's getting a lot of headwinds. There's, the wage pressure is much higher than in other parts of the world, so it'll be interesting to see what they do.
And in the context of the UK election, which, by the way, the policies are starting to trickle out. We'll see if that actually changes some of the wording and the narrative from at least some of the members.
But they don't have money. Where's the money?
Which is just wild, right? I mean, you have no fiscal headroom. You have all these policy stories, and then yet the BOE is still the most volatile player in the room. And it'll be a really interesting dynamic. That does it for markets today. Francine continues the good effort. The Pulse is, of course, up next. She has a good lineup there. We continue the coverage of the South African elections, continue this market coverage as well. Don't go anywhere. I know it's a holiday, but I tell you, the best hour is yet to come. Stick with us. This is Bloomberg.